We'll come out of this for a moment and monitor their comments about AI and data centers, energy use, and the like to continue having a conversation really about energy from here in the Middle East. Doug Flynn joins the conversation right now, of course, from Flynn Zito Capital Management, as I continue from Istanbul, Turkey today. We were talking earlier, Doug, good to see you, about oil prices. We were talking about the Strait of Hormuz. We're talking about how long this is all going to last. In the middle of this, the stock market, meantime, as I mentioned right before we went back to the president, ended up having a good day today, which seemed a little weird to me, but maybe not. Can you take that first, the stock market, and then we'll talk oil second?
This is definitely an energy shock story first and a stock market story second, but what the stock market is doing is looking at these past conflicts, and there have been many, unfortunately, and so you can kind of take solace from what has happened in the past, and in all of them, while the stock market reacts initially negatively, it recovers in depending on how long the conflict is, in a couple of months. And so, you know, I think it's just looking through to that and saying we can see past what's going on initially. And also you see things like energy stocks really rallying while some of the other things are kind of going down even in this. And so I've talked to you about that before, where you have to think of wearing two hats, not just a sort of a consumer hat, which everyone thinks of, but also an investor hat. So while you may be paying more at the pump this week and next week, you definitely will, you made a ton of money on your energy stocks if you had them. So that's the way to look at it, I think.
Right. No, I'll go back just briefly to the telestrator on the Strait of Hormuz question with the ships and facilities that have been damaged, so many of them getting hit in the UAE, you know, Qatar, even Oman, which has been a mediator, got hit. But this is the strait right in here, this narrow pathway into the Persian Gulf. Secretary of the Treasury, Scott Bessent, was on TV earlier. So they've been talking about either having Navy escorts maybe or added insurance. But anyway, here's what Bessent said about it.
We began yesterday with the announcement that DFC will provide the insurance for both the crude carriers and the cargo ships operating in and around the Gulf over the weekend.
Will that work, Doug, do you think?
Well, you know, this is 1/5 of the global supply goes through here of both oil and natural gas. So at any time, even a minor disruption can cause a spike in oil prices, and that's what's happening. So, you know, then inflation fears rise a little bit, so that's kind of bubbling up. But yes, I think that what he said is, everybody calm down. We're going to do two things. All of these private insurers are getting scared because they don't want these ships to blow up and have to cover it, so they're exiting the market. The U.S. is going to backstop that, so don't worry about your insurance. You can ship. And the second thing is, yes, U.S. military escorts will make sure that they can keep the routes open, and hopefully that reassures markets. Now, that's happening on the equity side, on the stock side. It hasn't happened yet on the oil price side because there's other factors at play there, with also other supply disruptions and other areas of distribution getting impacted from all the bombing and things that are going on.
Yeah, I feel like it's a timing issue as well. I mean, we were talking earlier about some stock market investors making a bet that this might be shorter rather than longer. In other words, it might not drag on as some have predicted, whereas you talk to other people, they say, no, this looks like Iran can string this out, even if their firepower is not what it was, and even if they're, you know, the strikes on Tel Aviv, for example, might be slowing down night to night. The fact that they have this leverage over this strait, if they keep hitting there, they can string things out, and they know how painful this is. Isn't it a matter of time? Like, if it's a week, it's one thing. If it's two, if it's 3-4 weeks, you got a real problem in that strait.
Yeah, I think, you know, look, if tankers are moving and facilities aren't offline, these spikes and whatnot, or these disruptions can kind of fade in about, you know, 1 to 2 months, and within a quarter you're back to normal. If flows are seriously disrupted, or you have extended closure or damage, it can be months. But even if you go back to the Gulf War in 91, the market took a serious downturn for 3 months, and then 6 months later, it was back to where it was before with double-digit returns. The same thing happened with the Iraq War. When that started, initially, you know, a big drop, 15% in the market, and a snapback immediately of half that, and then 6 months later, also double-digit returns. So even in more serious wars, you might say, and maybe this becomes one of them, those things are the history. And in lesser ones, it's a much shorter period than that. So we'll see how it plays out. But here are those opportunities. It's kind of weird to sort of play on the disruptions, but that's what the traders are doing. And so, you know, whether you're doing it or not is something you can do as an investor if you want to. But those are the things that are going on. And eventually, you know, like everything else, unless it disrupts into World War III, this is going to get settled like everything else. And unfortunately, it's probably not going to be the last time we have to deal with issues in the Middle East. This is what happens every so often. But there's a lot of history here, so you can look to it.
All right, Doug, as always, thank you, Doug Flynn, on what is a very important component of this wider story as we